Hello, and welcome back to the Vancouver Life Real Estate Podcast. Today is Thursday, November 5th, and we are here to update you with the October GVRD real estate stats.
Yes, big month, almost as big as last month, only just shy of last month in terms of how big the month was.
So let's recap quickly. If you didn't hear or you didn't remember, September set an all-time sales volume record for that month last month.
Ever.
That's it.
Yeah.
And then, interestingly, that pace somewhat continued, and October is the second highest October ever recorded, and only shy by around 100 units.
Yeah, we're hearing from every different corner right now that we are getting, our mortgage brokers are telling us that they're busier than they've ever been. There's a lot of activity happening right now, tons of it.
And what's interesting here too, Ryan, is you look at the previous highest October ever, it happened in 2009.
Wow.
And guess what was happening then? We were coming out of a recession.
Interesting.
So it's I guess you can almost lean in a bit on the fact or the term of pent-up demand, right? Because things obviously slowed way down in 08, in the beginning of 09.
Yep.
Things slowed down here when COVID first kind of caused the lockdown, right? March, April.
Yep.
And so we're just seeing this resiliency in the Vancouver market at time and time again, and especially coming out of a recession. People, that weren't buying are still looking to buy, and now they are.
Yeah, and I think a lot of sellers are seeing that too. Depending on where you're shopping and whatever your price point may be, right now we're seeing inventory levels. They actually dropped 5% from last month, but they've ticked up about 1.5% year over year. That's an inventory level of about 3.5 months.
3.5 months. So that's low.
Yeah.
That's going to go quick.
Yeah.
And I guess touching on the sales too. What was it? 29% higher than last year.
Yeah.
But the big number too, because we know we're coming off of a low baseline of last year.
Yeah.
But the sort of real telling indicator is that 35% above the 10-year average.
Yeah. So last year's and this year, and they're not really average years. So you look back and you look over the 10-year for some consistency here in terms of what we're doing for performance and activity, and the levels are huge. The levels are huge.
Mm-hmm.
This is kind of a spring level activity.
Yeah.
Right.
Exactly. Well,
that's all spring is now.
Kinda, yeah. So understandably, with that kind of sales volume and the lower than average inventory, we are of course in what is called a seller's market.
Yep.
And that is for all property types in GVRD.
Yeah. And the HPI average, the price sits at $1,045,000, which is officially 6% up from 1 year last year. We were hovering about 5.8 last month. I think we're up about 0.2% this month in terms of price point. Yeah,
there you go. Average price, if you can believe it, our stats site is actually down right now, but I did get a glimpse yesterday. So forgive me if I'm off by a couple of G's here, but it is an all-time high for your average sale price. I believe it was $1,114,000.
Wow.
And the median price, also an all-time high, $846,000, up
incredible.
About $11,000 from last month.
What about, are we getting any more activity on the pre-sale side of things?
Well, that's what's very interesting to see, because the pre-sales are in essence a lagging indicator.
Absolutely.
They kind of pick up steam the last in an upward market, of course.
Yeah.
And
they're usually the first to cool too.
That's true. Yeah, they are, let's call it a more volatile property type or asset class here. And yes, good leading question here, because in fact, the pre-sale market hit a 1-year high in its absorption rate, 36% in September.
So very much in line with what's going on in the resale marketplace.
Mm-hmm. Yeah, and interestingly, that's the highest since September of 2019.
Wow.
And 36%. That means 1 in every 3 homes that hit the pre-sale market last month sold.
Wow, that's impressive.
Yeah, that again, right? We're a 1-year high on that, so we have not seen that in a while. And of course, pre-sale is a largely investment-based space.
Yeah.
So that goes to show what kind of levels of confidence are coming back in that arena.
Well, and we've talked a lot about potential deferral cliffs. We've talked a lot about the stories that have been written recently to kind of scare people. I don't know if they've been written to scare people, but they sound scary. And it just goes to show that at least locally and really nationally, it's just not happening.
No. The scary headlines have been around forever.
Yeah.
And they will be around likely forever. And that's partially why we do this podcast.
Totally.
So we can dig beyond
Totally.
the headlines and just give some data that is often contrary.
Right. So, I mean, let's back out a second.
Contrary. Sorry, let me pronounce that correctly. It's contrary. Contrarian.
If we back out a second here and let's take a look at some macroeconomics and some things that may be influencing the marketplace as a whole, both nationally and also locally here. I mean, nationally speaking, Dan and I did a presentation for a group of investors last week. Nationally, home prices are up 17.5%. I mean, there's a national move here.
Yeah.
It's not just here in Vancouver, right?
Yeah. That's true. It's people often think Vancouver is kind of in its own bubble, as much as I hate that term, but it kind of operates independently a lot of the national market or global market for that matter. And very interestingly here too, this rapid increase in property prices that we're seeing through the pandemic is not just localized. It's not even nationalized. This is happening around the world.
Different marketplaces all over the place.
Yeah, people are putting and feeling confident in putting funds and money into properties right now. And, you know, there's a few data points we can lean on here. That's places like even the Philippines, Portugal, Poland, the Netherlands, Russia, Germany. Those countries alone saw between 8 and 17% price increases in Q2 alone this year.
This is fascinating. This should be almost like a case study on real estate and pandemics.
Yeah.
Like I didn't.
And recessions?
Oddly, I didn't realize, I guess, this is maybe a bit more of a general question, but are people flocking to real estate because the pandemic is creating insecurity and they want to be in a more secure place? I'm trying to get beyond the whole repurposing of real estate here and trying to figure out maybe why globally real estate prices are going up everywhere. And
well, interest rates are also low in most of these countries.
Right, because they're recovering too. So there's a lot of stimulating. I had some elective surgery this week, and the painkillers are getting to me a little bit.
This will probably be one of our more entertaining guests.
Yes, absolutely. No, but honestly speaking, I'm just looking beyond densified living and things like that. I guess interest rates are really pushing people taking more money out and trying to make that leap now. And you combine that with the fact that the vast majority of jobs that you need in order to buy a piece of real estate they haven't lost their income at all. And really you then look at the marketplaces. I was hearing Bitcoin's up at 15,000 right now.
Yeah, it's on a tear as well right now.
Right. So I mean, the marketplaces, the election has a lot to do with this too, but we won't get into that. That's a whole nother podcast.
And not a real estate one.
No. Anyhow, let's look a little bit at the luxury market here because it's increased in October. Right?
It's something that we've been tracking pretty closely because we find it to be an indicator that is not touched on or talked about too much. And confidence in the luxury market it's gaining steam. It feels like, right? It's going up as well.
Especially when you see 35 homes sell over the price of $5 million.
Just last month.
Yeah. Then another 4 over $8 million. We've been tracking that one for a few months now.
Yeah, there you go. So, upwards of a couple $100 million worth of high-end properties sold just last month in GVRD.
It's fascinating. I mean, it certainly echoes a little bit that the wealth gap is continuing its, I guess, spread.
Yes, go ahead.
And it's just... it's unfortunate in many respects, but ultimately in real estate here, it's driving our market. It's really pushing our marketplace. It's pushing prices. It's pushing activity levels. I was on the phone last night with some of our partners here, our mortgage partners at Pilot Mortgage Group. They told me they have never been busier. We had Mikhail here last week from BMO saying the exact same thing. There is a lot more coming.
Yeah.
Which is part of the conversation I think we should be having.
Yeah. Right? And we will, for sure. Okay, so that's all seems very shiny and optimistic. And that's not always the case. And it's not always the case today either.
That's right.
So we want to dig a little deeper and kind of share what's happening on all sides of the market and also for all property types, right? Because the GVRD on a whole is upward and shiny and exciting. But
there's a tale of two stories here.
Yeah, there really is. Right. I think this is one kind of a good way to define what's happening. And since March, since the lockdown, the average condo price has gone down.
Yeah.
On average of about $6,500 for the GVRD.
Which is interesting because if you look at the statistics speaking, you're seeing activity levels that are still, broadly speaking, increasing. So they're not telling the story of really what's happening. It's when you take them apart and you start to look at them individually that you really start to see that places like townhomes, for example, are up 23,000 and detached is up by 82,000. That's huge numbers. Conversely, right?
Yeah, exactly. And again, this is only within the last, 6 months that we're looking at here.
Yeah.
So that kind of is a telling factor. Now, sure, the condos at less than 1% doesn't say that much, but it does actually when you look at it compared to detached.
Well, yeah, you've got one going in one direction and the other going in the other, right? And this goes back to the exodus of condos that we've been talking about, and really that epicenter being in the downtown core of Vancouver.
Yeah.
People are still moving out. They're moving out of their smaller places and they want more space. A lot of these people, their jobs were not impacted in the same way that many others were. And as such, they're now vacating those spaces. The border's still closed, so we don't have anyone really either renting that vacant space or buying that space now. And as such, we're starting to see the price drop.
Yes, exactly. And, this last week we've been hitting record COVID numbers here in BC. And that's, of course, got the investors scared as well. Yeah. Especially downtown for, your Airbnbs. Who knows at this point when the tourism is going to come back. Who knows when the jobs downtown are going to come back, right? We're still basically being told not to be in dense areas. Well, and what's denser than a downtown condo?
Well, further to that, the Real Estate Board of Greater Vancouver just came out and said, we're not allowed to do open houses now. Not that we were really doing them in that sense. Everything was by appointment only anyhow. But, it echoes the fact that there's a spike in COVID cases now globally. We're all aware of that. And really is, are we going to see, how's it going to affect us? Is it going to continue? My question, and I think it's something that we should really think about, is it going to continue to actually push prices? Right? Because everybody thought COVID was going to crack prices.
Yeah.
It's doing the opposite.
Right.
Yeah. At least if you own a townhouse or a house.
Correct. Yeah. Yeah.
Caveat there.
Yeah, no, fair. So understandably, of course, with this influx of inventory and Airbnb units being converted to long-term rentals, the downtown rental rates down 15, upwards of even 20% now.
Yeah.
Right. Which again is why people are maybe panicking or feeling that they just want to repurpose that money into something that may be better used elsewhere. So yeah, we still have about 1,150 condos for sale downtown right now. And yes, we are seeing prices, downward pressure on prices, right? Yeah. About 5.5% on average for downtown.
Well, and last month we had about 2.5 months of inventory, and now we've got about 3.5 months of inventory.
Okay.
Right. But it's not all bad news, because I honestly think, and I think Dan does too, to a large extent, that this is a temporary issue, right? And once we gain a control over a vaccine, an effective one, and these COVID levels start to drop, the border opens up, it'll come back pretty quick.
I agree, right? Let's not forget, it was only back in, January, February that all the rage was talking about how there was just not enough housing.
That's right.
There was not enough housing.
That's right.
There was not, right? And that hasn't changed. What's changed is, of course, the reduction in immigration.
But you also look at the, some of the statements made by the Canadian government. Next year they're trying to bring in 351,000 permanent residents. I mean,
Trudeau's actually upped that.
Oh,
which we'll get into shortly.
Wow.
It just happened today.
Oh, interesting.
Yeah. It was 351 yesterday.
Oh wow.
Yeah.
Well, I mean, but it makes an effective point, because a lot of how we're going to pay back this debt is going to come through new immigrants spending their money here, right?
That is Canada's plan almost wholeheartedly. Yeah. And so, like you said, that 350 was an initial, century high number.
Yeah.
He's actually accentuated that to 401,000. That's the target for 2021.
Why
right
not
now.
402?
That's just ridiculous. That's just excessive, Brian.
Yeah. But then so the country as a whole is going to be bringing in more people, right? That's how we understand we're going to pay off some of this debt. The other side of it is the Bank of Canada encouraging that spending.
They are, right? I think, as we've touched on before, the banks, the government, they did pretty much everything they could to make homeowners feel comfortable when the pandemic hit, with the deferral option on people's mortgages.
Yep.
And then, of course, they started buying up the government bonds.
Right.
Right now, if you can believe it, they own something like just over 30% of the bond market. And on track, are you ready for this? They're on track to own something like 50% in a year from now.
So their control is going to be incredible. Mm-hmm. Their control over the marketplace.
That's it. There's some eyes on them right now. They're saying, "Okay, that's not maybe shouldn't be allowed
too much." Yeah. And then you've got them promising extremely low rates for the next 3 or 4 years. So this is going to really, really help induce spending. Yep. Allow people to take on more loans and have them paid back in an easier fashion, right? So it should increase the level of economic activity.
Yeah, and that's the plan. Let's be honest here, right? Yeah. Like it's funny when 2015, 2016 was happening and the markets were accelerating too fast.
Yeah.
Well, here comes the stress test. Here comes increased interest rates. Here comes a foreign buyer tax and 3-4 other taxes behind that.
That's right.
And that cooled it down. And now that it looks to be too cool, well, now they're trying to elevate it, right?
It just speaks like there's a finger in the pie the whole time.
Yeah, well, of course. Right? When it's a 30-year GDP, you're going to protect it.
Of course. Yeah.
Okay. So, to kind of touch on this, so the immigration, right? So, yes, they're seeing rents fall, and they're like, okay, red flag, how do we fix that?
Yeah.
Right?
More people.
More people. Yeah, no, and that's 100% it, right?
Yeah.
They want, 401,000 next year, 411, and then 421,000 the following year. So they're looking to say, look, we had a shortfall in 2020 here, and we are going to escalate that to cover it, and then some, which I guess is like you said, right? We're going to help use the taxation from new residents to help repay COVID.
Well, when you pay out twofold what people lost, then you have to add something to the equation, right?
That's it.
And that's, I think, where they're at.
Yeah.
Let's talk about some employment levels here, because BC's employment levels have returned to 96% of the pre-pandemic levels.
Yep, that's impressive.
Yeah.
There are jobs here, and again, these are a lot of the middle and sort of lower wage jobs that have returned.
Yeah.
Right. So to be only 4% off of where we were at the worst part of the pandemic, it's I think that's doing more favorable than a lot of places around the world.
Yeah, and I guess the question in everyone's mind is, will it last and for how long?
Yeah,
right? Because today, or was it today? No, it was yesterday where we hit all-time records for COVID levels.
Yep.
And that's scary, right? And the response was to shut down open houses and other things, right? So there's some movement happening again in the marketplaces. To what extent, no one really knows.
True. But what we will say, taking a snapshot today, Canadians have saved more than ever. They're feeling confident in the real estate market, if only in that. There's a few things that a lot of people maybe feel confident in today, but the majority do feel confident in the real estate market and are putting their savings in that sector. And this is partially why prices are increasing.
Yeah, and oddly, Bitcoin.
Yeah, so that's kind of our economic overview about what's happening. And now we're going to give you guys a bit of a deeper dive into the actual numbers.
So before we hit the price, one thing I just want to mention, the average property price has actually increased 11 of the last 13 months.
Yeah,
that's huge.
For those of you that are watching this on YouTube, and we do the overlay graphs, it's a pretty interesting upward trend. And of course, the only months where it came down slightly was like April, May.
That's right, pandemic.
Yeah. So when the market kind of froze, people pulled back, it dipped a bit. But of course, once people got that sort of green light and things, the restrictions eased, then it got right back to...
it dipped a bit because they weren't allowed out of their house.
Hard to buy homes.
Yeah, hard to do anything.
Yeah.
So that was when everyone was buying toilet paper. So anyhow, the average sale price of your Greater Vancouver piece of real estate here, $1,045,100. Sorry.
Close. Yeah. The T3's talking. Try again. Do it again.
Yes.
People know what you're talking about.
$1,045,100.
There you go. So 6% up year over year.
Yeah, it's a $58,000 gain.
Yeah, 58.
Yep.
So October of last year, that number was $986,000.
Wow.
So like Ryan always likes to say, you made $58,000 just living in your home.
Yep. Okay, let's look at the total volume of property sales.
Yeah, so as we mentioned earlier, this is a huge number, the second highest October ever recorded.
Yeah.
3,687 homes sold.
Wow, and that's just 100 shy of an all-time high. So very close.
Right.
Very close. 29% increase year over year, right? Ultimately, we're just seeing a ton of activity here.
Yeah, and this is a 1.2% increase over last month as well. So it sold more than last month, which was an all-time record September.
That graph is just like...
Yeah. But similar, I mean, you kind of take out the COVID and it's a bit of an upward trajectory here.
I would say so.
Yeah. It had obviously, there was a cycle that was happening.
Yeah.
And it was briefly interrupted, but it has maintained its cycle trajectory.
Yeah, and it does. It makes you wonder sort of the first few months of the year here where it really started that upward trajectory. You got to wonder if we're at the start of a new cycle here.
Well, yeah, I mean, the cycle to me is...
Or was there a pandemic restart?
It's the economics are still pointing upwards, right? Shockingly, but they are, right? You can't have the sales to active listings ratio where it is and low inventory and this much demand and not see a continued upward trend on prices rather.
Agreed. Yeah. Okay, newly listed. Right now, detached home-wise anyhow, 5,571 newly listed homes. That is an increase of 1,497 or about 36.5%.
And sorry, Mr. T3, but this is all properties, not just detached.
Sorry. Yeah.
All good. All good.
Yep, I just saw that.
Although most of them, actually no, not most of them were detached, but just for reference sake.
Yeah.
Sorry,
guys.
All good. Hey, it's the data. We'll get there.
Yes.
So a year ago, I mean, the numbers were just over 4,000, almost 4,100.
Yeah.
So there's activity here.
And sellers are seeing the activity.
Yeah.
Right.
True. Yeah. Last year, again, a bit of a low baseline. So jumping almost 37%. In a sense, it was needed because we're still below that 10-year average.
Yeah. And the demand still far exceeds the supply here. Right. And that's the quantifiable measure.
Yeah. 13% decrease compared to September 2020. So, a bunch less homes than last month.
Yeah.
In a low inventory, as we know, the 3.5 months of inventory.
Also coming off of a record month.
Yeah.
Right?
Yeah.
So, okay. So total inventory now is actually down year over year by 1.5%. So last year we were at 13,096 units and now we're at 12,416.
Yeah, it was kind of, it had just cracked that 13,000 threshold last month, and it kind of played around, up and down, and then October it just got just eaten up.
Yeah,
it really did. Right,
yep.
People are ferociously buying homes right now, as we're seeing with these record sales volumes.
Yeah. For all property types, the sales to active listing ratio, which is one we judge or determine activity by, is across the board a seller's market here and has increased, although October last year was a pretty strong market in terms of sales to active ratio. But we're up again from then. We're 29.7%. Yeah.
Well into a seller's market. Keep in mind, you enter a seller's market at 20%.
That's right.
So we're almost 10% above that.
Yeah.
And again, for our YouTube viewers, if you look at this chart, I mean, the sales to active listings ratio has been increasing since January of 2019.
Yeah, it hasn't stopped.
Yeah. Again, there was a COVID lull or correction or whatever you want to call it, but it bounced right back.
Shot right out.
Yeah. So once people could buy again, the sales ratio jumped again. And I mean, it's up 20% in what is now 2 years, right? Yeah. So all indicators are pointing up.
Yeah. And the indicators that aren't present here, the ones from our mortgage brokers, from our specialists, anecdotally through the industry, are saying that this isn't stopping.
There you go.
Right.
And this also, too, a quick side note, the sales ratio is the highest it's been since 2017.
Oh.
So we're at a 3-year high in sales ratio.
Wow.
That's an important one because, again, this is very attached to pricing.
Yeah, of course. So now we're going to break down the Vancouver West real estate stats. I always love looking at these because I find them...
The big numbers are fun.
They're huge, yeah. Okay, well, let's start with detached.
Yeah, so prices are up.
Again.
Average detached home in West Vancouver, $3,118,000.
Wow.
An increase of 5.5%, or about $163,000.
Just for living in your house. Sorry, I had to say it, but
Yeah.
yeah, it's an impressive number.
So yeah, this property type in this area, you can see the cycle here in the graph, and it hit bottom somewhere around August of 2019.
Yeah.
So about a year and a half ago, and it's actually up about 192,000 since then.
It's just climbing. And you know what's funny, Dan? Today I was actually in Vancouver West looking at a $3 million house. Mm-hmm. And there were, every 10 minutes, people coming through the front door.
Jesus.
And I'm talking for 2 hours.
Yeah.
People we had a 10-minute slot to look at a 2,600 square foot home.
Jeez.
You know, it's 108 years old, beautifully renovated, sure. Mm-hmm. But, listed at 2.99.
Wow.
Right.
And a lineup.
Yeah, and a lineup. $1,200 a foot for a 100-year home.
In which area specifically?
Cambion 20th.
Wow.
Yeah,
okay.
very, very close to Douglas Park.
That's not waterfront.
It's not waterfront. No, it is a hell of a neighborhood, though.
Yeah, of course.
Beautiful spot. But again, tremendous amount of money to live there.
Mm-hmm. So at this $3.1 million average sale price, 111 homes sold last month.
So there's a marketplace for it.
and look at this demand, 42% increase in sales from a year ago.
And I think that's what a lot of my buyers are having issues with.
Yeah.
They're like, how can there be so much activity at this price point?
That's it, yeah.
And it's just because, well, it's a large part because money's cheap, right? But also because look at how it's performing. People made $160,000, $170,000 living in their house for a year, right?
There you go. As you can see here, 198 newly listed homes. But that's only a 17% increase compared to the 42% increase in sales, right? So
it's going to get tougher.
Yeah, that's why we're seeing prices up, and we're seeing inventory down. Yeah. Inventory down 19% from last year.
Yikes.
Yeah, 585 homes available as of today.
And what's very, very interesting is this time last year, we were in a full-blown buyer's market, and now we are in a seller's market. I mean,
very close. Sorry, we're at the very high end of a balanced market. But
I would the reason I'm saying that is because if you look at the activity levels, you look at all of that, it's just trajectory.
Yeah,
right?
If you're a seller, you feel like it's your market.
Yeah,
in that neighborhood, for sure.
Yeah,
when you have people lined up to see your $3 million home that's going to sell in 1 week, you feel like you're in control.
Yeah, I would agree. So now let's do a dive into our Vancouver West townhomes.
Yes, townhome, big demand as we talked about, people that maybe can't afford a detached home but don't want to be in a condo.
Yep.
Your average price point on the west side there, $1,158,000.
Yep, up 4% from this time last year, a gain of about $45,000. We're starting to see, I guess the price point appears, on the graph here. It's not crazy.
Flying. No, it's interesting. It's a little bit more of an even-keeled property type right now.
Yeah.
When you look at the homes sold compared to the big jump we saw in the detached, there was only about an 8% increase in homes sold for townhomes.
Yeah.
And listings almost a push at like maybe down 1%.
Yeah, so it sounds like to me on the west side of Vancouver, the townhome market anyhow is meeting a lot of this demand. At least in this sector.
Sure.
And this month.
Yeah.
It might change next month.
Fair. Inventory down almost 10%, so this is why prices are increasing. But interestingly, have a look at that sales ratio.
Yeah.
23.5, right? So in seller's market.
Yeah.
In seller's market and has been basically for about a year.
I'm going to say right now that for an asset class, I like this one. Mostly because it's got sustainable growth numbers. The inventory levels are good. You've got sort of homes sold that is matching kind of your inventory demand, right?
Yeah.
It's in sync. It's not out of whack like in detached, right?
Yeah.
So I think this is going to be quite a predictable asset class.
Okay, great. Well, let's look at condos now.
Cool.
Average price, we are up year over year at about 4% or about $30,000, bringing us to an average price of $784,000.
Right. Trending though, not the same way.
Yeah. So this property type was up about almost $60,000 for the beginning of the year. That's lost about half of its increase over the cycle, and downwards of about $30,000 since March. It's interesting. Literally the month that the lockdown happened, condo prices started going down.
Yeah. Well, and that's due in part to the fact that people started figuring out that when you live in a dense area, your chances of getting infections are higher, right? And then all of a sudden we started throwing cheap money, and that kind of corrected it. But people still want more space for that money.
Right. So. And this next page of data kind of, I believe, forecasts very truly as to what we believe is going to happen in the future. And that being, of course, continued downward pressure on prices.
Yeah. I mean, year over year change in terms of homes sold, it's actually identical to last year.
Identical. To the house. 365 condos sold. But then look at the listings.
So newly listed. So just take a second here, because in the month of October, we sold 365 homes. 854 were listed.
Yeah.
Whoa.
And that's a 66% increase from last year.
Yeah, but we're not even buying 50% of what's listed or coming on the market. Right. So if any, trajectory wise, we're looking at more and more inventory coming on the market here than it's getting consumed.
Exactly.
Right.
Exactly. I mean, inventory now at 1929 units, right? About a 38% increase from last year. And that, I mean, to get into specific numbers here, last year, October, 1,400 units to choose from. Now we're getting closer to 2,000.
Wow.
You know, when you have a 500-600 unit jump in difference, like that's a lot of inventory to choose from.
It's big.
Right?
And then you look at the sales ratio too, and the sales ratio is dropping. You know, this time last year, it was a great seller's market, and for good reason. We didn't know about the pandemic, right? And we were just coming into a correction now, so a lot of activity. We were selling a lot of condos at the end of last year. Now, you know, that sales ratio is at 18.9%. So back into a balanced market where it was flying in a seller's market last year.
Yeah, exactly. So I do suggest we do have some data to share quickly here on the Vancouver east side, and this is detached homes. But before we say that, we will let you know that the stats site that we pull all our data from, it's actually been down for a couple days. So while we were hoping to give you the full picture,
too many people buying homes.
I can't shut down the server. It's a slow count, like our friends to the south. Anyway, so we'll share this with you. Of course, the rest of the data will be released likely on our TVL report, which you can download anytime here. But for the sake of today, we'll give you all the data that is available.
That we have, So this time last year, your average detached home on the east side of Vancouver was $1.378 million. Very, very respectable number, far more affordable than the west side. But having lived in it just for a year, how much would you have made, Dan?
$129,000.
That's a staggering number.
Yeah, that's huge. I mean, you're making over $10,000 a month in equity in your home just by living in it.
That's phenomenal.
That's better than rent.
I would say so.
So that brings the average sale price up to $1,507,000, a 9.4% increase in price from a year ago. And this, again, it's kind of a recurring theme here, but I think ever since we started this podcast, this type of property in this area has always been the highest performer.
Yeah, if I had looked at everything that we talked about over the last sort of 5-6 months, this is where I would be putting my money. I'd be parking it here on the east side of Vancouver in a detached home. I really think there's room to grow. Yeah.
Well, I mean, you look at that chart and it's basically straight up from the middle of 2019. So, right, we're about 18 months straight of price increases, right? It hit the bottom of the cycle, the downward cycle, around summer of 2019.
Yeah. And if anything, it's done nothing but really plateau and then keep going up. It hasn't really dipped.
Right.
You know, and that's echoed in... you know, the homes sold, we're looking at 150 right now for the month of October. This time last year was just over 100 at 108. So that's a 39% change. Huge change.
Yeah, definitely. But again, activity, right? People are listing right now.
Yeah.
We saw as much as a 57% increase in listings, which is 85, totaling 234 new homes that hit the market just last month.
But it doesn't really matter because
it's not the whole story.
No, because even though it was a good month for listings to come on, in all honesty, the overall inventory is still down 12.5% over this time last year. So we still can't meet the demand despite people recognizing that the market's doing well and putting more on. It's still just getting eaten up.
That's right. And so knowing all that data, it's not really a surprise that we were in a strong seller's market at about 28% here.
Yeah, that's very, very strong. As an average number, that's huge.
Yeah, for a detached home. And again, we're up 10% from a year ago.
Yeah.
A year ago, it was at the higher end of a balanced market. And just like the prices, it has consistently risen a percent or so per month.
Totally. Okay, well, we're running out of stats now.
So let's talk about some other things.
Sure.
So a quick look now at the pre-sale market. We did touch on it a bit earlier and talked about how it was the strongest month for sales that it had been in a full year at 36%. So 583 brand new units were brought to market last month, and a third of those sold.
That's awesome. Sorry, I mean, for the pre-sale market, because the pre-sale market has been struggling. They've been struggling for years now. And to start to see some of these numbers is reassuring. It's especially in the marketplaces that are outside of Vancouver. We're really seeing submarkets like South Surrey, Langley, Coquitlam, Fraser Valley that are really starting to hit these numbers, right?
Yeah, our colleagues in that industry are certainly talking about a tremendous uptick in sales volumes at their sales centers.
Now, what's winning here in terms of pre-sales? Is it condos or is it townhouses?
It's a split, but honestly, wood frame townhomes seem to be leading, especially out in the Fraser Valley.
Wow.
Yeah, that's. I think again, it's affordability,
and speaks to what we've been talking about, where people are leaving their condos in the downtown core and they're going for a second, third bedroom out in the valley. You're getting that space, right? Same sort of dollar figure, right?
Yeah, they're all ticking up, to be honest. But we're seeing largely the demand for wood frame. But again, that pendulum swings both ways, right? So I think we're going to share different data coming up.
What about now pre-sale? Would you consider that a pre-built home as well, like a detached home? Because I'm just looking at some of the single-family and townhome sales in places like Mission and Abbotsford, and we're seeing sales that have jumped over 100%.
Isn't that wild?
Wow.
Yeah.
I don't even really know what to say.
Yeah. I mean, we do some business out there, but yeah, the agents and colleagues that we have out there are just, they're working 28-hour days.
That's crazy. And then you also look at places like Whistler, which are performing incredibly well. I mean, we've known this for a while now, especially in the luxury market.
Yeah.
But yeah, I mean, right now we're seeing sort of 6-month price increases of 5.5% and about 6.5%.
Oh yeah, Whistler's wild. Again, I always pay attention to it, having grown up there and having seen such wonderful and beautiful homes there. It's fascinating to see our colleagues up there and just the volume of homes that they're doing, but volume at a very, very high price point.
Yeah.
The luxury market in Whistler, I think, is having an all-time year.
Very bougie.
I would if I could.
Yeah. So let's maybe turn our sights on the Okanagan right now.
Yeah.
What's happening in the Okanagan, maybe Vancouver Island too?
Oh gosh. I mean, Okanagan and similar to Sunshine Coast here, right? You're seeing these massive, 15 to 100% gains.
It's crazy.
Yeah. That secondary sort of getaway home market has absolutely exploded. Yeah.
That's the word for it.
It has. I mean, seeing triple digit gains, I mean, come on, that's, it's unhealthy but it's a reality of what's happening in that market.
And speaking to that, we're actually going to have a guest on our pod next week who is going to actually talk a lot about the interior market and what's going on in terms of construction and construction starts, all that kind of stuff. So Stay tuned for that, because that'll be a really interesting one if you're in the market for a vacation home.
Nice. Fantastic. That'll be super, super interesting, and we're excited to share that one with you.
Yeah.
Okay, fun time. Notable property of the month.
Oh, my favorite section.
Yeah, this one's been good. So we have a 108-year-old home in Kitsilano.
Amazing.
Location, of course, it was the deal here, right?
Yeah.
This is a home that is north of 4th. It is just a couple blocks off of Billionaires Row.
Yeah.
built in 1912, as we mentioned. And, this is 2,700 square foot over 3 levels on a little 2,640 square foot lot.
Sounds expensive for already, and you haven't even got to that.
Yeah. This home was listed for just under 2.2.
Yeah.
The agent did list it a little low, thinking it would generate some interest and might get, a little bit over asking price.
It did.
Yeah, it did. On offer day, they did hold offers. 15 offers came forward.
15 offers at $2.2 million.
Yeah, exactly, right? So you're looking at, there's $30 million worth of buyers right there. A bit more, 35.
Yeah.
Ultimately, what happened is there was 3 groups, apparently, that really wanted this home. And they bid each other up and up and up. Again, 2.2 list price. Ryan, what did this sell for?
Well, it actually sold for 2.811, right?
Yeah.
So we're looking at a total, over list purchase of $613,000. And when you look at the tax assessed value, somebody paid nearly $1 million over and $913,000 over.
Yeah.
Which is a huge number. Mm-hmm. I mean, that's personally, I think that's a little bit of an emotional buy.
Sounds like it. This house, the structure is valued at $56,000.
What?
Like, it's 108 years old, and there's some beautiful updates to it, but it's 108 years old.
So this speaks to location,
of course, 100%. Right.
Yeah.
This is one of the most sought after locations in all of Canada, let alone the world.
And I think a lot of people hearing this might think, well, maybe that person overpaid by $600,000. But if your plan is to hold this property for 20 or 30 years, chances are you didn't overpay for it.
Yeah, there you go.
Right.
And for those who want to look it up or check out the home, it was 1842 Collingwood Street.
Right.
Is the address in Kitts there.
Yep.
Cool. Let's touch a bit on interest rates. It's hard to not hear about interest rates these days. I think to put it simply, we are currently still at all-time lows.
Yep.
Another record low. It seems to be a trend here.
Are we going to have a record pod one day?
Yeah, that'd be nice. Come on, guys, download it. Make it a record. What's the current low?
The current low is I don't actually.
The low? Well, what we heard last week, 1.59. Yeah.
I mean, it's free.
It's close.
They're about. I mean, money right now has never been cheaper. Mm-hmm. It's never been cheaper to. So when you look at that home that just sold for $2.8 million, you put some financing around it. Mm-hmm. It's never been cheaper to find that $613,000 that went over.
Yeah. Yeah, exactly. So, we can do a deep dive here, but we just did a great interview with Mikhail Ferreira, as Ryan mentioned. So that was just our previous podcast. So if you want more in-depth knowledge about what's really going on in the mortgage space, have a listen to that one.
Totally.
Super informative. But really, the thing that we will touch on is the Bank of Canada has all but promised that rates are going to be this low for the next 3 to 4 years.
It's a long time.
And they have not taken negative interest rates off the table. Wow. So we may do another pod with another record in another month talking about lower rates, 1.49.
One might say that would be an interesting podcast.
Yeah.
Oh, jeez. Sorry. That's more painkiller jokes.
Perfect. Okay. Well, I mean, we touched on immigration. I think maybe we just touch on or talk a little bit about our forecasts.
Yeah.
What's going to happen in the next 3 months here? Because, it's November. It's supposed to be slower. And then comes December and January, which, historically trend downwards as far as sales volumes go.
Yeah.
But
I'm not convinced, just based on what we're hearing. Stats aside, I mean, because a lot of these stats are lagging indicators. The leading indicators that we actually have, hot on the press right now, are telling us that this is just an abnormal year.
Yeah,
there's really no rhyme or reason to say that this sort of time of year is usually a slower one, because this is just not one of those years, right? And the activity levels, the low interest rates, I just don't see it stopping. Unless the pandemic gets a little bit more out of hand, which it is. So
I think too, that's very important to touch on when we're talking about our colleagues in the mortgage and lending space being quote unquote the busiest they've ever been. This is not just a bunch of people checking in to see what a refinance looks like.
that's right. Yeah.
And that's important. These are people that are looking to buy homes.
That's right.
They're looking to transact. They're getting financed often for the first time, or they're doing a lateral or move up move.
That's right.
Right.
Yeah.
So
a lot of that actually.
yeah.
A lot of the move ups.
So low interest rates, extremely busy lenders, low inventory.
Yeah.
To me, this says, what we're saying today is going to continue.
Yeah.
I think the GVRD numbers for next month will all be similar to this month. I think we're going to be up, up, up.
Let's briefly talk. I just want your input on, are condos going to continue their trajectory? Are townhomes going to continue theirs? And are single families, historically speaking, single family has always been the big winner. I think single family is back on that train.
Yep. No, I do. I think condos, especially downtown being the epicenter, is going to continue to soften.
Yeah.
Right. I do expect those prices to lower.
Temporarily.
They do act differently in the valley, but we're focused more here centrally and downtown. Townhomes, they're going to continue an upward price trend. I think at a civilized pace.
Yeah, I would agree.
Maybe a quarter point, maybe a half point per month,
right.
kind of thing.
So maybe
5-6 on the year, which is still
that's
above
great.
average. Clearly,
that's $60,000 a year when you're looking at a $1 million average price point, right?
So, but detached, clearly, a colleague listed one today for $10 million, and it sold in one day. And there's just these stories have become all too frequent. And as we know, Ryan, you just touched on it, right? You're out there shopping at $3 million, and there's a lineup down the street to buy it.
Yeah, and my clients are looking at me for some sort of reasoning. And I tell them that it's affordable, cheap rates, and the demand from the pandemic is pushing people one way or the other. But still hard pill to swallow. Even these are for people who can definitely afford that. They're still scratching their heads like, do I really want to spend that? And the question is do you really want a house? Because that's what it's coming down to.
It's hard to laugh at, but it's laughable in some sense.
This house that we saw today for $3 million was on the market for one day. With that many people coming through on the first day. Yeah,
we're seeing homes listed without photos going into multiple offers that day.
Yeah.
That day. That's what it's like out there right now.
Yep.
That's the demand. So, if it's like that today, plus everything else we talked about, you can't not do anything but see an upward trend in price.
Yeah. Barring something crazy happening as of the election down south, I really don't see too many hiccups coming our way towards the end of the year.
Fantastic, everyone. Thank you so much for listening and watching as always. For all of our data, for all of our YouTubes, our podcasts, our downloadable 50-page comprehensive Vancouver Life real estate report, please visit thevancouverlife.com.
Yeah. Otherwise, we will see you next week.